something simple is just take your $1 billion of cash and credit and convert it to Bitcoin. It's so disruptive that everyone's got to have an opinion on it, and so they're forced to have an opinion without spending 100 hours or 1,000 hours to understand it. So
going to be very interesting. I mean, the EU as well. I mean, there's a whole lot of stuff. So as you say, regulation is going to be a feature of our lives. You know, I know the space originally thought that could get around regulation, but it's not going to. It can't do.
Well, let me come back to one last point, which is everybody's caught up in the sound and fury in this. You know, the sound and the fury and the noise, and they're sifting through 6,000 altcoins and trying to figure out the future of this and that and the other. And then the one big trade is right in front of your face, which is Bitcoin's going up 130% a year every year for a decade. Bitcoin is up much more than that this year. The cost of capital, if you're issuing expensive junk debt, is 6 and 8% interest. The cost of capital for Coinbase is 3.375% interest. The average person's cost of capital on a mortgage against their house is 2.5% interest. There's tons of money. You can borrow money at 5%. You can loan it out at 100%. Right? If the only trade you do is you buy $1 billion of Bitcoin with debt or equity or whatever and sit there and wait, it's a pretty good trade. And it's you don't need to take all these other risks. It's like people ask me, are you lending out your Bitcoin? Are you trying to get yield? I'm like, well, we're getting 130% yield on average for a decade, but we got 250% or whatever. Why would I risk losing it all for 5% more?
I mean, I'm the same. I don't do any of that because it's a risk that I can't quantify and it's unnecessary.
Buy a high quality property and wait. And I would say take all that energy. All these companies jumping through hoops, juggling razor blades to figure out how to do something complicated. Something simple is just take your $1 billion of cash and credit and convert it to Bitcoin. All the balance sheets of the world, all the balance sheets of every company, they're sitting on cash and credit that's crumbling, right? It's not even debated. Everybody knows the debt is losing purchasing power. Everybody knows the cash is losing purchasing power. And every one of these companies has the ability to borrow money or raise capital, you know, at obscene rates, right? You're raising capital at revenue multiples that are obscene, and you're borrowing money at interest rates that are lifetime low. So there's plenty of capital. There's one obvious trade. Just convert crumbling cash and crumbling credit into digital energy, into pure property, which is not debasing or degrading. It's that simple. It's a simple idea. It's almost too simple. So everybody has to look for the second derivative, the third derivative, some complicated idea. And I guess where I come back on is like, I'd rather spend 1,000 hours figuring out how to borrow the next $1 billion and buy Bitcoin than spend 1,000 hours creating a software company to do something complicated with Bitcoin, or to spend 1,000 hours studying, looking for the next Bitcoin. It's like, why don't you just borrow $1 billion at 0% interest and buy it and wait? Because Satoshi's innovation is real. It's that simple. Because people think the trade's going to run out. Well, not till we get to like $200 trillion, it's not going to run out. I mean, we're $1 trillion now of market cap. So you've got 100x turn on that.
Yeah, to my point.
And 99% of the marketplace hasn't taken that trade.
No.
And why is that? It's like, there's no ETF, so I can't punch a button. It takes 6 months to figure out how to buy the naked asset. So make it easier. And the other reason they haven't taken that trade is gap accounting, accounting optics. Okay, and people say, well, are you bothered by that? And I think, actually, I'm not bothered by that. I mean, the truth of the matter is at MicroStrategy, the longer it is that that people are afraid of the accounting, the longer we have as the exclusive, publicly traded buyer of Bitcoin. If everybody else is afraid of indefinite intangible accounting and I'm not afraid of it, then I get an exclusive on buying the stuff. And I guess it's going up at 200% a year. I don't think I want it to go up any faster. If it went up 1,000%, I mean, didn't you lose the opportunity to buy? So
yeah,
I'm not bothered by the FUD. I describe it as like the shock wave. It's so disruptive that everyone's got to have an opinion on it, and so they're forced to have an opinion without spending 100 hours or 1,000 hours to understand it. So that's the shock wave on one side. I'm not bothered by the accounting because it's just optics, and making billions of dollars while you take a non-cash charge of something which you can look through is actually kind of a differentiator for a company. If you're not afraid to go through that, then you've got a unique value proposition to the marketplace. And the ETF, it makes it hard for some institutions, but then that means maybe they would rather buy stocks of companies that are Bitcoin friendly, right? So it's even the negatives are positives, and when the ETFs come, well, maybe my stock's not so unique, but on the other hand, Bitcoin will appreciate by a factor of 10 because there'll be a wall of money coming in the space. So you make it back that way.
All that I do is tune out of all of the noise and just look at the network adoption, and then that's it. And over time, as you say, the market cap goes from 1 trillion to 100 trillion, and everything else is noise. How long it takes to get there, kind of irrelevant.
Yeah, I think so.